Hello, everyone. Welcome to Market Trends. I am David Russell, Global Head of Market Strategy at Trade Station. It's great to be with everyone. We're going to start with my normal disclosures. I want to just tell everyone if they go to tradestation.com and on the top navigation bar, if they click on Insights, it will bring you to our blog. And our blog has the normal um, sort of things that are in there that we normally share. The zip file that has some of the workspaces and things like that. So wanted to just remind everyone to go to tradestation.com. I'll show you where that is. Go to TradeStation, go to Insights, and then go to this blog post. I'm going to share a few things as well in the Slack. It's not Slack, sorry. It's just the chat, the instant messaging. Great to be with everyone. We do these webinars every Thursday at 2 p.m. So please make sure to join us. So here, if you go, this will open a zip file. The zip file has a series of ELDs and workspaces that you can use to actually, kind of um, follow along and recreate some of the analysis that we're doing here using the award-winning TradeStation platform. And also our trading view ideas are here. And we have a series of things I want to go through today, but very quickly, let me start off as usual by looking at the S&P 500, my favorite thing. And really, to me, what's very interesting, I have a few different ways to look at this. I'm going to look at this chart right here. Last week we had talked about, a channel that was developing. In many ways, I have the Keltner channel here, but in my view, this is maybe not even what matters. But we essentially have here a rising kind of trend line in place that is the bottom of this channel. You could basically just, basically look along here. And this is to me right now, the really important feature in the market. We could do a quick little, create a parallel, and you can see how this is something of a channel here. So in my view, well, let's not worry about that. But the key thing is this is a parallel ascending channel. Last week in the webinar, we actually showed how it was a tight sort of channel going up. We came down and held the bottom. What's really important to me here is that we held this low from the 5th. That was a weekly low. We continue to see this pattern. Tight pullback, held the weekly low right here. What's interesting here is there's another kind of tight pullback at a slightly higher level, but was here. This was the breakout right here above all-time highs. And then did we pull back to test it? No. We found new support above 48.18, the high from the beginning of 2022. Again, that was a weekly low that we came down and held. Again here, weekly low that we came down and held. So this is what a tight, aggressive uptrend looks like. This is what it looks like when something is under accumulation. In my view, pullbacks are shallow, but what also is very often most interesting is it kind of weird levels you would expect. Very often weekly lows, recent lows suddenly turn into support. And you say, oh, we got to pull back to this level because it was the old high. And, in another world, another kind of market, that might be the case, but that is not what's happening necessarily. So if you actually look at the chart here, we have some things we highlight. We point out these lows. And also it's interesting, I don't have it exactly on this chart, but RSI, I call this the RSI is cooking. When something is trending higher, very often RSI just goes overbought, drops to 50, goes back to 70, drops to 50, and it just stays there. And if you look at stocks that are really trending aggressively higher, I mean, I'm not gonna, show them all now. I could probably do it really quickly if something just like, even look at something here like Nvidia when it was in its aggressive uptrend. RSI, it can just go overbought and stay overbought. If you sold it when RSI was overbought right here, what does that do? Not very much. Even back here at different times when it went overbought, you can see it just continued to trend higher. So when something goes overbought on RSI, it if you're in the context of an uptrend, what it can actually do is confirm the uptrend. And I think that's important to realize. That's kind of what we're seeing here. Also, we have this little thing we have here in the S&P. We've shown you how to do this before, the up-down kind of counter. But basically what this shows is the days up and days down. And it basically just shows how many days the 1-day moving average, which is 1 day of price action. It's the MA streak custom indicator we shared here for people in our ELD and our workspace. But basically what we're seeing here is that it just can't put together a downward kind of pattern. If you look at times when the market is bearish, you're going to just see, and this is like really simple because it doesn't show price, it doesn't show percentage. It doesn't show levels or anything. It just shows like how many days do the buyers control versus the sellers control. It's a time-based measure of trend and strength. And what you'll often see is in a down market, I mean, it's fairly obvious, you're just going to see more down days. You're going to see here, you can see that we put together, 4 consecutive down days. Well, we've not had 4 consecutive down days since the beginning of the year, the little pullback that we had right here. And so I think that's the sort of thing that we need to kind of just be aware of is that we're not able to consecutively put together selling days. And that's another sign that there's just not a lot of sellers out here in this market. Or potentially that is the signal. Also, I think there's something interesting. I'm going to just quickly pull up. How can I do this easily? I saw something really interesting that I wanted to point out, and I'm going to show you. I'm going to do a chart here. Um, the 10-year treasury has been a big thing. We had the hot CPI, kind of hot this week. Is it hot? Is it not? But I think the thing that's important here is I'm going to look at the TNX, which is a long term. I'm going to go to a weekly chart of this thing, and I'm going to go back, make the data go back a long time. At 30 years is good enough. But what's interesting is if you look back, I'm going to make this all right. This was a high in 2008, right here. It was around 430. So basically, what's interesting here, and let me I like change my style to candles with trend. That's going to give me hollow candles. But basically, if we look here on the 10-year treasury, I think the main thing I want to just say here is this high right here was actually a high that the market had in '08 as the financial crisis was happening, and it was a pretty significant resistance level. You can see we hit it there in October of 22. We hit that level. Then we ripped through it, but now we're going back and potentially hitting resistance at it. So this could actually show that the peak in treasury yields, is kind of coming together, despite this, some of the strong economic data and the slightly hotter CPI. At the same time, it's interesting just to see this level that was resistance in the past is turning back potentially into resistance again. I'm not a big fan of head and shoulder patterns, but in many ways, this is the logic of a head and shoulder pattern. You have a high, and then a lower high. So, you know, you can kind of, I mean, head and shoulders, I've seen people twist charts all over the place, but I think the basic principle is there, which is that basically this is a potentially important level that could be starting to exert relevance again. And I think that's something we have to be aware of. Other things here, if we go to our MT breadth workspace, one of the custom workspaces in that zip file that you can see. And what we actually see here, it's really interesting, is these are highs in the S&P 500, and we're starting to see more stocks making highs in the S&P 500. If you look historically at this data series, you can see that this green line down here, now these are some really complicated charts I created that I would encourage you that if you use them to don't modify them and save your changes, because you might struggle to go back and ever recreate what I did. I'm very careful with myself. These have like multiple different tickers on them, multiple indicators. It has advanced decline line. It has highs and lows. It has stocks above the 20-day moving average and the 50-day moving average. We have it here for the small caps. We have it for the Nasdaq, and we have it for the S&P. I haven't built it for the Dow because to me, breadth on the Dow is kind of just I mean, they're important stocks, but they're kind of like 30 stocks. Nvidia is not in there, so I mean, it's like I'm not sure how much I care that much about breadth on the Dow, so I did not include the Dow Jones on this. However, the thing that's important here is that we're basically seeing more stocks making 52-week highs, and that's another potentially positive sign. Now, we have had an indicator we've used before. I kind of call it, trying to think of what I called it, something about enhanced market breadth. But essentially, what this is the number of stocks in the S&P 500 above the 20-day moving average and the number of stock above the 50-day. So I always use, if you guys watch my work, you're going to see I always use this kind of blue line, kind of tealish blue for the 20, and the red is my 50. Simple moving averages, just so you know that. So this is the 20, and this is the 50, and there's the red is the 50, and that's the 20. So down here, I'm using the same color coding, but this is different. This shows the number of stocks in the index above each one. Now, I've noticed in the past that when you start to see a cross, and let me be clear, this has not worked in the last 3 to 5 months, but it did work for most of the period of time, kind of second half of 22 through most of last year. And what happened is when there's more stocks above the 20-day moving average, like right here, when the blue line crosses above the 50-day, above the red line, that means more stocks in the S&P are above the 20-day than above the 50-day. And what do we see? We often see the market actually improve and turn on that. Now, this stopped working somewhere back here when the market started rallying, when the market was rallying. And not entirely sure why. I think it was, if anything, because we actually saw a strange thing happen with utilities and REITs. And there's a lot of utilities and REITs, and they're all relatively small. So, again, this is one of the problems with breadth. You have these strange companies like utilities and real estate investment trusts. They're some of the smallest stocks, but there's a ton of them. And then you get these strange things when they do badly and they skew breadth in a bearish way. But regardless of that, one of the key things I want to point out here is that this had a bullish crossover today, for the first time in a long time. And that could potentially suggest that we're seeing improving breadth across the market overall. It's a signal we've looked at before. Like I said, it hasn't worked for the last 3 to 5 months, but it did have an interesting sort of significance previously. And I think it's important just to see that we're seeing more stocks making highs. In fact, I haven't looked at the advanced decline line. We're hitting new highs on that. So one of the things I actually want to mention in this webinar today is that we're actually starting to see a wider sort of breadth kind of across the market now. And it's not a surprise. Most of the big caps have reported. Don't forget NVIDIA on Wednesday of next week after the closing bell. That is in many ways one of those milestones. But anyway, I think the thing is most of that news is out there. So the thing is that now people who want to buy smaller companies and start doing other stuff, they're starting to look toward that. And there's some news on that I'm going to be getting to. In fact, there's a lot of news that I need to zip through these things. So right now we're seeing something of a shift here toward value, toward small caps, toward this equal weighted concept, the idea of the equal weighted index against the overall S&P, and that's the idea that smaller companies participate. Apple lags, Microsoft lags, things like that, and these other names kind of step in. It's a phenomenon. The market swings in a pendulum between mega cap leadership, small cap, or mid cap breadth. Mega cap leadership, mid cap breadth, and now we're swinging back toward mid cap breadth, which is financials, industrials, and potentially some of the consumer discretionaries, and maybe some weirder things like materials, which I'm not even as sure about. I mean, these are kind of strange. Most of them are small companies now, but I think financials and industrials, I mean, financials in particular seem to be having some things going on today, the banks and stuff like that. And biotechs, that's another area as well, where there could be some things underway, and we're going to be getting to those. The one other thing I want to say, just looking at the market overall here, as I look at empty breadth, as we talk some, I remember last year we were saying it's hard to imagine the market being a bear market when the private equity firms are bouncing and rallying off their 200-day moving averages. And we started to see these patterns in stocks like Apollo and Blackstone. And we were talking about these, and these stocks are really, I mean, they're really performing. I'm not sure about overall, like any of these individual names, but these are companies that will profit from a bull market because they're going to be, selling assets in the future. If they're rallying, it's just one of those indicators that it's something to look at. And to me, I think it's interesting to look at the private equity firms because they've really been performing here. And I wanted to point that out because to me, it seems like something of an indicator for the overall market potentially. Another thing, very quickly, I want to look at the American Association of Individual Investors. Now, I look at this because it's just a kind of measure of people's sentiment and things like that. Let this thing come up 1 second here. What was interesting is the number of people bullish this week dropped sharply after that CPI report. So this is what I said. When a market is topping, people don't care when bad things happen. They get complacent. They just don't care. It's reckless but still in the beginning of this kind of a bullish move like this, people are skittish. They're nervous. They sell quickly and then they say, "Oh, I shouldn't have done that. It didn't drop." And then they come back and they learn the hard way to be buying pullbacks and not selling the dips. And the thing is, in selling short-term strength, and I think right now we're still in that learning phase when people are realizing there's not a lot of sellers. Things are skewed in this sort of direction of more strength, more buyers fewer sellers. And this is a pattern you're going to see. When the market is at a high, this sentiment will remain bullish even when it starts falling. And um, and in my view, we're nowhere near that yet. And I think one of the reasons is, first of all, we just broke out, and secondly, we haven't really seen, much of a kind of economic situation like we have right now, really, I think, in most people's recent adult memories. Because the fact is, like I've said, I believe the American economy is going through something we really haven't seen in decades, and we just have to recognize something different. It's kind of like, I don't know, you have a tree in your backyard, and one day, it grows for 5 years and it never makes any fruit, and then suddenly it starts making fruit, and you say, well, and then you realize, you know what? Guess what? The last 5 years of history isn't the tree. The reality is the tree makes fruit every year once it reaches a certain age. And the thing is it just because the last 5 years or 10 years of our economy worked a certain way doesn't mean that it's going to remain that way. There are certain things about the American economy that are now coming back, and they're much more bullish than I think most people realize. Because if you go back before the financial crisis, and I've been talking about that, but I want to just mention that very quickly. This skittishness, I think people, this is a sign that there is, still we're not in the late stages of a bull run here. All right, so I have so many things I want to get to. If you want to just cover this, honestly, I'm going to just zip through stuff I had here in my. I'm going to just run through some of the kind of important things that I have saved up here in these tabs. First, I'll just very quickly just show you. I mentioned materials. Nucor had a good earnings report a few weeks ago. This is one I want to just point out. It had this interesting rally, came back, held this level. This is one that NUE, remember the S&P 500 steel maker. I want to just mention this because it had an interesting earnings report. And the thing is, a peak in yields, maybe a little bit of weakness in the dollar from here. A name like Nucor Materials, this is a name that jumped up on my sort of list. Now, another thing is copper. I mean, there are people saying copper needs to rally and all this stuff. I want to just mention some of these top copper names. I mean, you look at this and it doesn't look terrific, but if you see here, all right, Tech, this is TECK. Now, the thing is, it's holding a double bottom here. And if you look at it, it's making incrementally higher lows. But I think the thing is that if the dollar has any kind of weakening here, if we have any kind of downdraft in yield, any kind of decline in yields in a sense of a kind of something of a weaker dollar, anything like that. Copper is one of those areas that might, be interesting. So TECK and SCCO both look like they're kind of at the early stages of trying to kind of line up potentially. I wanted to just mention that. Another thing that's interesting here is, Tesla, in the near term at least, put in this higher low, and to me, this is something now where it's kind of just holding its ground, and could kind of move its way back up somewhat. Potentially, I think Tesla remains a very challenged kind of stock, but it was interesting to see when it came down and held this higher low, and that was to me kind of an intermediate, term kind of pattern here in this name. For me, I think the thing about Tesla is it's such a big company, and there's levers they can pull. Elon Musk can kind of start acting more normal again, and things like that can start to happen. They could say they're going to do cost cuts or something like that, or a buyback or something, and the stock could, react to the upside. So I don't want to be overly sort of, expressing an overly negative view of Tesla. Although for me, there are certain things when you look at a name like Tesla now, where a growth stock, when it's broken, it can be a very frustrating experience, and people might come back to something, but there's really structurally, when you look at Tesla over the longer term here, there's a long kind of downtrend here that's been taking shape. And from my perspective, there's a lot of things here that this is a stock that could kind of punish and frustrate people, when other names like Amazon perhaps are actually, holding their grounds and continuing higher. So Amazon was interesting to me, and another one that was very interesting today was Citi. Citi basically had this downtrend that it broke. Banks and financials here to me are an area that I'm, kind of be looking at. So let's take a look at some of these articles I have here, because I think that there's a lot of stuff here that I need to very quickly cover. This is a thing from S&P Global. What did they say? They basically said that M&A is picking up. January was the second month with, when there were four, $10 billion deals. All right, that's kind of interesting. I've said M&A has not been a driver in this market for years. It's interesting. I was kind of looking back at my own career, and I really got engaged in the stock market um, after the tech bubble had broke, and kind of in a period of credit. When you had a lot of things happening of mergers and activist investors and companies doing spin-offs and all these things, and I was involved looking at a lot of stuff with credit behind doing some of those deals, and as an area I kind of looked at. And then in some ways, in the period of time, especially after about 2012, 2013, that has not been a driver. But I think the thing we have to remember is that it can become a driver again. And so I think that, when you start to see this sort of thing picking up, it can gain potential, sort of relevance in the background. And this is one of those things that has not been a driver, and there's evidence now that it's coming back. So here's another thing. All right, community banks are striking mergers to manage climbing costs. Now, there's some of these things when banks can just, I mean, there's times I've looked back at a financial stock and I've said, why did it double in the last year? And then I look back and I realize they did something that sounds so boring, like some merger or something, and they cut some cost, and it doesn't sound very interesting. But some of these companies, when they actually do those sort of big sort of events, they can generate significant synergies. And so I think this is interesting when you look at where the banks are right now. We had that whole thing with New York Community Bank Corp, but now in many ways that sort of thing has shaken up, and we're in a situation now where we have a strong economy. And yeah, there are definitely some problems with commercial real estate and stuff like that. But from my perspective, we have to take a step back and look at the bigger picture. And I'm not going to dig it up this time, but I showed you before. There's the debt to income for the American households right now. It has come down significantly. Whatever you want to say about student loans and stuff like that, Americans are financially in the best shape they've been since I don't know, since before the financial crisis. So I mean, we're in a spot here where we have a strong economy. We're not highly leveraged. The banks overall, they're not highly risked. I mean, they have some problems with commercial real estate, but our economy is not leveraged when you get away from the federal, the federal deficit's a whole nother question. But when you look at, the overall environment for credit right now, the sort of things banks do, lending money for economic activity and general demand and things like that, they're in a position right now where there's not a lot of issues, and there's not a lot of signs right now of any real stress in the system. So I think right now we have to realize that the banks are actually in a spot where they've been through quite a lot of stress, and that is something now where if it starts to pass and ease, then people can see that as an opportunity. This merger thing could be another part of that story. Um, George Soros was buying New York Community Bank Corp. That's kind of interesting. Again, it just shows there's people pecking and interesting and kicking the tires and looking around and stuff like that. All right, this company had something where they did something I don't even let's see, I'm trying to remember exactly what this one was. I archived this recently, but basically it's something to it was something that just means that its crisis is kind of fading. The problems in this. So it's New York Community Bank Corp. It's reciprocal deposit capacity, which another thing when banks go through strange tensions, these weird things come out of the woodwork, these weird Fed facilities and all these different backstops and things. And I think the key thing in all of this is that these things are starting to be removed. And they'll some things like this you'll see in your years of investing and trading, and you'll never see them again. It's like it pops up once and then it never comes back. The key thing is look at the bigger picture. The bigger picture is that this company went through a crisis, a real worry, and now those fears seem to be calming and sentiment is turning the other way. And I think that's really the key thing. The market priced in probably a lot of negativity. Now George Soros is buying, and there's other things like that. And it just kind of shows that, this thing has kind of passed. And this also creates a potential for value investing, for small cap investing, and people saying, maybe I'm going to find some bank that's going to rally a lot because it's undervalued, or they're going to do some kind of acquisition. And then suddenly you look at, wow, I just made, like 200% in Nvidia in the last year. Maybe I should sell a little of that. Or Apple's not going anywhere. It hasn't broken out. Maybe I should put some money in some of these undervalued sort of, smaller companies. And that is how the rotation happens. And we're seeing signs of it. Um, in fact, let me just close these tabs so I don't have too many. New York Community Bank Corp. And let me just quickly actually show you what I'm talking about. Let's go to our key ETFs. So there was so much news. I really wanted to focus on a lot of it because I do see some interesting things happening. But if we look, for example, in the last 5 days, we can see here that the small caps are outperforming. The IWM is up 4%, and then the Qs right here. You can see our indexes. The IWM is outperforming the Qs by a huge factor. But if you look over like something like a period of time, like more time, it's interesting why the IWM now is actually kind of outperform. It's starting to outperform the Nasdaq. Look at this on a 3-month basis. This was not true 2 days ago. Now, remember last webinar, I was actually saying, well, we could see a rotation this week after the macro events. CPI was hot and it caused the small caps to tank, but they are still trying to. It's been interesting to see them try to advance. And with the retail sales today, in some ways, this weak retail sales number was the first miss in 7 months. So it kind of shows right now we're in a spot where this economy can have a pendulum swinging. And we saw this back in 2022. We saw the pendulum swing toward the industrial side. We saw industrial numbers like no one has ever seen in the history. I mean, probably since, like, I don't know, maybe go back to the 40s or something. But we had just dramatic expansion in the manufacturing side. We had really strong ISM numbers, really strong PMI numbers in like 2022, and it caused inflation. And then that cooled down. And in many ways, the manufacturing has been in recession for the last year or so, and then the pendulum swing back to consumer, and we saw the consumer come to life, and also AI came in. But now we're in a spot where, and we mentioned this because we saw this in the data. S&P Global made this call last month, as we talked about at the time. They said we're going to see a revamp of industrial activity, and that's what we've been seeing. Today's New York Fed Empire Index, the Philadelphia Fed Index were both stronger than expected, and lo and behold, there was weakness in the retail sales. So it's going to swing back and forth between industrial activity and retail activity, industrial and retail or consumer. Now, I think one of the things to remember, though, is that doesn't mean necessarily the consumer stocks are going to do badly. It simply means that that's kind of where the economic strength is. And in some ways, that's fine. It should be that way. You should be seeing this rotating strength. There shouldn't be just one thing. And I think that's really the key thing. If you went back to 2007, it was like housing was the only thing in the economy. Industrial was terrible. Like everything else was bad. All that was good was home building. And that was a distorted economy. Well, we have the opposite of that now. We have an economy that is just constantly kind of dispersed strength throughout the economy. One of the things also is, it was interesting, and I talked about this last week, about the growth of employment in the healthcare sector. Go back to my last market trends. If you don't know how to do that, go to the actual blog post, go up here and click on this thing that says market trends, and it will bring you back to all the different market trend summaries that I have. If you go in this one about this tight channel, you can actually see here, this is that channel I was talking about. Look, we came right down and we're somewhere in here. But anyway, this thing about the healthcare workers. Well, what's interesting is, what was the CPI? Where was it hot? Healthcare was strong. I want to mention something, and I think this is something that people are not yet appreciating. The healthcare industry right now is going through significant growth. From that chart just showed it, and we talked about other things at the time from the results of Humana and stuff like that. Well, isn't it interesting that at the same time health workers increase, and we saw increased usage of health insurance, increased usage of healthcare facilities, like we saw in the Humana report and the CVS report. Magically, what do we see heat up? Health care cost in the CPI core services. So I think we're seeing something here where basically we know we have an aging population, and now we're basically seeing what people have been talking about for a long time, which is the aging population is going to drive growth in the healthcare industry. And maybe that's why we saw inflation in the healthcare, because basically there's more activity, more demand, and that corresponds to higher prices. So it's something to think about. It's also it's non-cyclical. So Jerome Powell can raise interest rates all he wants. Is it going to make an impact? Not necessarily. So it's just something, maybe it's something of a risk over time. To me, that's so abstract at this point that it's not something to think about. But it is something just to be aware of, that we are seeing activity in the healthcare industry that seems to be picking up. And we've talked about medical devices and things like that. We're not going to talk about them today. All right, let me just get back to this here. Basically, Barclays came out with this note on Rivian. I mean, one just mentioned this. It was just interesting to me about when you look at the EV space, it's trouble because, like I said, you have these other companies now competing. There was something today happening with Ford. I didn't have a chance to check it out, but Ford is making some kind of big EV announcement today. That's something that you guys might want to check out. All right, now, like I said, Wednesday of next week. Big day. Might be a big day things hinge on. And there's two reasons. First of all, we're going to have Fed minutes next Wednesday on I think it's the 21st. Fed minutes at 2 p.m. Now, that might be bearish. They might come out and say a bunch of stuff that sounds hawkish and something. And then NVIDIA reports. And people could sell the news in that. So I want to just point out that, if there's a spot that is a logical stopping point of this advance that we've been in, it might be Wednesday, February 21st. A combination of potentially, imagine if we get a hawkish Fed minutes and then we get NVIDIA just so. Those two things together, let's just remember that. But just remember that these are these two events that are kind of an end of the, that are out there for next week. And one just mentioned that. But it's also interesting that, NVIDIA apparently was getting involved in some of these other companies. SOUN was one of them. That was just kind of interesting. I wanted to mention. And then there was this other company, I think it was an Israeli company that does like nano stuff for health insurance. Some kind of, I'm sorry, I saw it somewhere. It was a nano, I can't find it now. I'm going to just keep moving, but there was something here about NVIDIA doing an investment in a healthcare company that does some kind of AI for medical imaging, something where I think the AI can like read your scans or something like that. But it was, the stock was moving a lot. It's small sort of things, but we're in that sort of market now. Like I said, the market goes through stages. It goes through periods of correlation when it crashes and it rebounds. But now we're in that period of time when it's just kind of drifting. Yeah, it's inching higher, but we have low volatility, low correlation, and that is when those individual small names can start moving. So I want to, if anyone wants to find it, maybe you Google, NVIDIA Nano stock, something like that. You'll find it. Anyway, NVIDIA now replacing Alphabet as the most valuable company. I think it's moved ahead of Amazon. So you're looking here at something where there's a lot of excitement here in NVIDIA. And, I don't want to get into it because super micro, a lot of these things have moved. But the point is, like I said, I think we have to realize that after that NVIDIA report, we could see a shift to a different kind of market. And we could already be seeing it take shape, like I said, with the small caps starting to outperform, things like the banks starting to outperform. And that's the sort of, that's kind of what I have my eyes on next. I'm trying to identify the next market trends, or at least start talking about the things that might be the next sort of market trends to be aware of. This is interesting. Citigroup got an upgrade yesterday. Now, this is a name that also cost management story, very low valuation. Citi has been, this is just to me a very interesting sort of, you can see this downtrend it broke. It went to the bottom of the Keltner channel. This is one that that we had talked about. It pulled back a little more than I expected, but we kind of put it on our radar. And now we got this note here on Citi that was interesting. So again, it's not a small regional bank, but it is a bank. All right. Now, this was something that nobody talked about. Tax receipts are going up more than expected. I think that this is let me actually just go to my full screen, take myself off so you can see. All right. This is interesting. No one saw this. In my opinion, this got like one headline and no one talked about it. But the Treasury Department said that basically the federal deficit was lower than expected. Now, we've seen this before. This is actually, let me tell you, the federal deficit is actually a really good, the monthly data when it comes out, it can be a really good indicator of the economy and employment, because a lot of that stuff comes from people's, what do you call it, withholding and all that. So, anyway, I want to just mention this is actually a very interesting sign. And it's also an interesting sign when you think about what it means for Treasury bond issuance. Remember, last week we talked about Treasury bond issuance was lower than expected. That means that there's less upward pressure on the long end of the yield curve on interest rates. Okay, so that's interesting. Now, suddenly, Not only is the issuance lower than expected, now we're seeing a little bit better improvement on the deficit in January. So all these things are kind of confirming we're in a spot here where maybe this feared inundation of treasury issuance that's going to drive borrowing costs to the moon. Maybe it's not going to be quite so bad. Again, it's another one of these fears that kind of melts into the background. And again, that is what happens in a bull market. Everything that can go wrong doesn't go wrong. I'm going to just close these so I don't get confused. All right. Interesting thing here about Meta. Now, I got to say, my perspective, I mean, I'm not trying to beat up on Tim Cook, but the guy, is basically an operator. He's not an innovator. And, Steve Jobs created most of the stuff that really launched Apple. And if you really look at it over time, you can say whatever you want about services or watch, but let's be honest. Has Apple really done anything significant for a while? And I think the real issue here is that they created this headset, and I watched some reviews about it that were not super positive. Now, remember, we did a trading view idea that identified a potential move toward 180, and it's getting there. Um, just looking at the chart, some of the patterns here. Um, Apple has not broken out. We talked about this last week, but the key thing here is that here we have, um, Mark Zuckerberg kind of saying that it's not a great product. Of course, he's going to say nice things about his own product, but the thing is the Meta product is cheaper. Meta is executing now, and I think we have to be really careful here. We have to be really careful of just trusting Apple, because right now Apple is struggling. And honestly, I look at Tim Cook, and the guy was a great operator. He did a lot of stuff to manage the company well, but has he really moved it toward the future? And I think right now you look at Meta, they're moving the ball toward the future. And not only have they done these cost cuts and some of these other things with AI to incrementally drive ad revenue, if they really drive this augmented reality thing, it could become a big problem for Apple. So I want to just mention here that it's interesting. Meta's, continuing higher. I'm not sure if it's hitting new highs. Apple is not. This was a little article that was just kind of interesting. I think, yeah, yeah, of course, Apple Meta already went to new highs, so I forgot about this. Anyway, just want to point this out that at the product level, the chart is confirming what we see on the in the fundamentals, and the actual products are corresponding to what we're seeing in the charts. This article you might want to see on CNBC came out yesterday. There was just a note on Hewlett Packard I want to just mention. This is one of those companies where they go through like weird little cycles and stuff, but it got an upgrade that was just kind of interesting to me. And I want to just kind of mention that. I just started kind of making this higher low, and I wanted to kind of see if it can kind of turn and break this trend line. This is interesting to see the upgrade. I'm not super sure exactly about. I just wanted to kind of report and tell you guys it was kind of interesting to see this, this kind of falling trend line, and to see this upgrade it got. And like I said, we're in a period here where um, individual stocks in a bull market, very often the moves you get are like breakouts like this. It starts with an upgrade and wins earnings on the 28th. All right, so this analyst came out with this upgrade saying PC demand is better. So now the question is, you kind of have a window in time where the 28th is 2 weeks away, and they're saying that demand is getting better. The question is if the market keeps drifting higher, is this something that maybe, you know, has a breakout and a continuation up toward 31. So I want to just mention this one because again, all these little things are popping up. This was the Hewlett Packard. This was the same article. Positive sector dynamic, expanding margins. Oh, isn't that interesting? The magic word. Okay, I don't know much about this CRISPR. So this company basically there was an upgrade on it. CRSP biotech. We talked about biotech a little. This is obviously an interesting sort of pattern. This kind of tight consolidation and this acceleration. Not very aware of what this company is doing, but it was interesting that there's an approval of one of their products. Now with biotechs, you get these moments where they come up with interesting news, and some people really focus on biotechs. My perspective is that we're starting to see M&A. Biotechs are key targets for that. Banks and biotechs. Those sort of areas have seen some activity. But don't forget, we've also seen Carl Icahn. He's been active in JetBlue, so there's another activist sort of thing happening. So again, this was one that popped up, CRSP, and it seems to have some interesting news happening. Smaller biotech, again, when you're in a market with a low VIX and broad and good market breadth, improving market breadth, you can see sort of things happening like that with with something like a CRISPR, and these are the sort of things people start to look at. APPN. Now this was interesting. This company had something to do, and they're claiming that they have a big AI breakthrough. So I'm not gonna like talk a whole lot about this company. I don't know much about its business. It's a small tech stock, but now, of course, they're going to start waving the AI flag because that's what makes you cool these days. And we understand that. But the stock is moving today, APPN. And what's interesting is that if something real is happening in the stock, the thing is that most people who probably wanted to sell it have already probably sold it. What does that mean? It means that new money coming off these lows, you're going to see new money coming off the lows, and that creates the potential for something that might, kind of, fight higher. So I think this is one we want to, just look into more and study it more. None of these things would I ever make a recommendation or say anything like this stock is going to do X, Y, or Z. But what's interesting is you have a pattern here where you could have a complete change of narrative, a complete change of what the stock even is. And I think that's really, we want to potentially be aware in a name like this. Again, relatively small name. People forgot all about it, and suddenly we have improved market breadth, and suddenly a company like this has some interesting piece of news, and now we're in that sort of environment where some of these sort of companies can start to see some interesting stuff maybe. All right, Viking Therapeutics. Now this is our mover of the week, VKTX. This was one here that had an interesting breakout right here. Now it had this news right here. If we look back at this one, and back here, the beginning of December, Roche, I think it's German or Swiss or something, they bought a rival called Carmot, CAMROT. This is in my rundown notes. And then basically and then since then it had an earnings beat that drove the stock to a new all-time high, and it's also had some interesting sort of analyst notes. Now what's interesting about this company is that they have potential products. Now you want to kind of check into all this yourself, but what I can see, they have potential products that deal with obesity and something that is essentially a liver disease that results not from drinking too much. I mean, it's something that's called non-alcoholic steatohepatitis or something. So apparently it's when you get fat in your liver that's not caused by drinking. And I Googled it, and apparently this condition is massive. I mean, it happens, a lot around the world. So, obesity and some kind of widespread liver disease. So you're looking at a company here that might be hitting a market that is potentially very large, and it's a relatively small company. So it's had some interesting price action, different sort of catalyst happening. This is our mover of the week. Okay, let me just close some of these things. Uber. Uber learned how to buy back its stock. So it's interesting now. You see these tech stocks, now they're playing the games. Now, again, this is shareholder activism. I have not heard those two words in like 15 years. But when I used to do stuff in the credit market, and what I used to do is I used to be a journalist. I worked first at Bloomberg, and then I worked for a little trade publication. And what we would do is we would talk to the investment banks and track down the bond deals they were doing, and then basically publish it on a bulletin board where other investment bankers would read about it, and they would, kind of, it was like a community board between Wall Street investment bankers talking about their bond deals. And these are things that most people don't pay any attention to, but you learn a lot about companies when you learn their financing and how are they borrowing money and why are they borrowing money. And what we're starting to see now is in the world of credit, there's this constant debate between should I give my money to my creditors or should I give it to my shareholders? And creditors obviously want you to pay them back sooner so that then it's less risk. But the shareholders say, give them that money to me. So you start to see is when companies can give money to the shareholder, it's almost always good for the stock. Sometimes they will borrow a bunch of money, they'll hurt their credit, and they'll drive up the stock. Now, if they hurt their credit too bad and they go bankrupt, then obviously that's going to hurt their stock. But there's a fine line, and that's why CFOs get paid a lot of money to do financial engineering. But the key thing is we saw Meta announce a dividend for the first time. Now we see Uber buying back stock. There are things happening here. Now, remember, we were talking about Uber, and we said this company is going to end up in the S&P. It ended up in the S&P. Then it had this massive run, significant accumulation of a company where people looked at and said this company is a major name into the future. It's also interesting that Lyft had a strong quarterly report. Wow, I had not looked at that one in a little bit. Again, these are companies that were a fantasy. Remember, will they ever make money? Well, now they're making money. So what's really interesting about this bull market now is it's not just about Nvidia. And anyone who says about mega cap is not telling the truth. The fact is we are seeing a lot of these other companies that are suddenly coming to life. What did DoorDash do? Did they actually do well? I mean, DoorDash, same thing. It was like a college, like, business school project that got funded and it traded for like 50 billion times revenue or something, and everyone made fun of it. And it went public and it traded badly for 3 or 4 years. And now, guess what? Now the business model is working. Lyft, Uber, Dash, and there are others. And we've talked about this shift toward the smaller, newer growth stocks. And that's not on my list of things to talk about today, but I did want to just mention that this is confirming. And in the past, we've talked about some of these other names, and a lot of them have moved. I mean, one of the ones we had talked about a lot was I feel like it was Zscaler or Palo Alto Networks, and some of these that were like Cadence, CDNS. These are all things we talked about months ago. Um, you know, but anyway, the key thing is that now we're seeing this in Uber. Where basically what we're seeing is we're seeing this sort of you know these guys can pull tricks out of their hat. They can learn the old Wall Street tricks, and they're starting to do that, doing dividends, doing buybacks, cutting costs. That's the old Wall Street trick that Silicon Valley never did. Now they're doing it, and it's driving the stock up. Now, next thing, I don't even know how to pronounce this. IQV is a ticker. It's some kind of life sciences company. I just want to mention this. I mean, I've seen this. I keep seeing this chart, and I do these scans. I'm looking for stocks that have bullish patterns, and it seems like every now and then IQV just kind of pops up, and I don't really know much about it. But look at this. This is an interesting. I mean, I just got to say that this is a name now that is. It had this long basing pattern here, and they had a strong earnings report, and healthcare is starting to do a little bit better. What did I say about healthcare? So again, I want to just point this out that here's a name that in the long run, now it's in the S&P 500. If we do a weekly or something on that, this stock is probably what you could say is in a long-term secular uptrend, but it now has this long period of consolidation where basically it is potentially breaking a downtrend here on earnings. So this is one of these names that is kind of interesting. I want to just kind of mention it. It's again, we're starting to see people look for these newer names, and this was one that popped up. I want to share with you guys. All right, Nvidia, series of upgrades of Nvidia. Just people talking about the strong Q4 that they expect. Now again, we're at a spot here where things have run so much on expectation. I haven't even looked at Nvidia today. The S&P came down today and it held 5,000. I mean, this is just running so much. I think that I'm not even sure exactly what to make of Nvidia at this point in time. But there were a series of different upgrades and people kind of pointing out to it. There's obviously something like this creates the risk of sell the news, and that might also be the mainstream thing to do. I don't really know. For me, it's funny, I say like I used to do stuff in the credit market, and I've actually found that that's actually caused me problems sometimes because I started learning the stock market when tech was in their long bear market, after the .com. And as a result, I feel like some of the big cap techs is not necessarily one of my strongest suits. And the thing is, I think it's important to realize for all of us, what are our natural biases? Because the thing is, as the market changes, there might be certain stocks you like or don't like for whatever reason. It doesn't make any sense. It's like you were born one year and you knew about it, and then you never heard of that thing. As the world changes and as the market changes, we have to be careful to overcome our biases. And very often the bias, you might buy something and say, oh, it's great, it's going to last forever. But I find the much more common bias is you don't want to believe a stock is good even though it's going higher. even though it's performing, you doubt it, and then you compromise your ability to profit from something because you're blinded by some kind of prejudice because of something in your own historical background. I mean, Mark Douglas talks about this in some of his trading stuff to a certain extent. All right, so there's a bunch of things about Nvidia. I just mentioned I was always a credit guy to start. I mean, for me, that was how I started. I love stocks, but I learned in the world of credit. OGN. Now, this is this used to be Bar Labs, if you guys remember that. It was I'm pretty sure that they do a lot of different kinds of generic medicines and stuff, and but it's interesting they also had something of a big kind of transformative quarterly report here. Again, healthcare. Big start of, earnings beat and rally. Want to just mention that. All right. OGN. What else we have here? Sorry. I'm not sure what to make of oil and gas here right now. I mean, we had a huge draw on oil. And then the same thing is, so there's people who said oil needs to go lower because gas is just tanking. And there's all this weird stuff with the exports of LNG. It's very strange. Um, I'm just watching here because if I look at energy here, let's look at the XLE, the energy ETF. I mean, I've been watching and waiting and trying to figure out what this thing is going to do. And maybe now this is showing a sign of a break to the upside. I am really unclear about it. I remain in a position where if some kind of ceasefire happens in Gaza or something like that, and I don't know, but if it does, I mean, who knows with like, what's happening there. They say they're not going to do it, and then suddenly they do. I mean, none of us, I think, are experts in something like this. But the key thing is if a ceasefire happens, there's a chance. I think oil. There's people who are probably waiting to hammer oil if that happens. But anyway, I'm just looking here at energy, and I'm not sure what to make of it. And so I wanted to just kind of mention that. But I also think it's important to realize that some of the bearish indicators of energy, the reasons why people want to be bearish on it, things like natural gas crashing and stuff, are caused by weird distortions. These are things of geopolitics making things muddy and unclear. I wanted to just mention that I do remain in a spot where we had this article today, basically of the IEA, sees less demand for oil. And from my perspective, we're in a spot here. What have we been saying on this webinar for months now? Non-OPEC supply. Okay, and that's America, but it's also Brazil. I think there's what else? I'm sorry. There's another country that was increasing, but anyway, United States, Brazil, and there's another country also that was increasing production, Venezuela. So anyway, this is just an interesting sort of article. I think energy here is just kind of in a tricky sort of spot, but we do see a spot here where if the XLE, starts to kind of rally off these lows, there could be some people kind of coming into it. I wanted to just touch on it. This is to me an environment here that's pretty difficult to do very much with it. And I do think there is that geopolitical risk more to the downside than to the upside. Now, because I'm showing you this ETF, I want to just quickly go here to my standardized returns, just so you see the standardized returns of the different ETFs that are here. If you want to see the disclosures, if you go to the bottom of our rundown, you can see here the disclosures here for the prospectuses of these different ETFs. All right. But we had a huge oil draw this week. That was what I wanted to say. Now, just getting back very quickly to M&A, Walmart. All right, so JetBlue jumping on Carl Icahn interest when activist investors come out and do stuff. That's something that can pull money away from mega cap tech and be into these, undervalued sort of names, people jumping in. And then Walmart's buying Vizio, which I guess makes some TVs. I feel like I've seen those TVs at Walmart. Anyway, this other thing, again, small new names, Joby, Joby. I mean, oops. Anyway, this just had something here of like some kind of air robo taxis. Again, just kind of interesting to see something holding like a level like this and potentially fighting higher. So we have a lot of things here where we could see the market just inch higher, the Qs maybe be a little bit of a beached whale, and then everything else. Well, not everything else, but a lot of interest in this little story and that little story and this little thing and that little thing. So I want to just emphasize that because the market goes through these phases, and we've talked about that cycle. You have the correlated sell off, you have the correlated rebound, and then you have a period of low volatility stock picking. And that could be where we are. So I want to just mention that. And then that turns into complacency, that then turns into a sell off, and then correlation increases, and then it bottoms, and then it rebounds all together. So the thing is when you're crashing, it can be beneficial to trade the indexes. When you're rebounding off a low, it makes sense to focus on the indexes. But then when you're in the non-correlated stock picking environment, looking for the individual opportunities can be more of the thing that people look to do. Shake Shack also had a strong earnings report, another one of these things. So I want to just kind of mention that. All right, let me just look here if I have any questions. Are my fundamental indicators in the last zip file? Yes, they are. Everything I combined, just so you know, I used to have like 5 or 6 ELDs in that zip file, and I consolidated them all. I remade them to because I there were too many, and I tried to kind of clean things up. So everything I've given you guys are in there, and the fundamental indicators are used on this workspace. Let me just very quickly here. I want to just quickly show you. We did something on TradingView about HBAN. It was interesting. This company got an upgrade as well. And normally I'm not as interested in what analysts say, but we're in a spot here where earnings now are picking up again. We're entering kind of a new chapter, and individual kind of stocks are starting to kind of do things again. And this was one that I thought was interesting to see it holding this level here. Um, AT&T and T and Verizon also, they have these kind of potential uptrends forming, T and VZ. Um, this is just something I wanted to kind of mention. Um, Bank of America, I think also, making a higher low. And then to the downside, Kraft Heinz was one that popped up to me, kind of under that 200-day here. And, this looks like one where, maybe a few days of strength, and people might look for this to, have some more kind of weakness here. So, I mean, this is an environment where things like consumer staples, a safe haven, is where there is no strength. Now, remember, this is how we do this. We go to our key ETFs, and we then go here and we then rank stuff by these are the main sectors, the spider funds. Now I know these tickers by heart. Maybe some of you guys don't, but if you just click on it, you can see what it is. This is communications, which is Meta, Google, Netflix, stuff like that. But if we just look here in the last like week, what do we see? We see strength and wow, materials are leading, financials are leading. And I think that's just kind of interesting. These are cyclicals. What else is leading? Industrials. We talked about this a breakout in industrials. I mean, honestly, like I've not heard anyone else talk about it, but the industrials here, look at how they took out this old high. Boom. Came back, held it, continued higher. We were talking about this last week, but money just melting into these industrial stocks. Again, cyclical strength, the improving Empire Index and everything else. But that's what we're seeing here. And, a lot of these are the smaller sort of companies that perform better. And that's now the advanced decline line. So what are we seeing to kind of sum up the last? Let me just quickly mention. I want to just really quickly mention, if you look on YouTube or somewhere else on CNBC, Gene Munster, the tech guy, said the NASDAQ he thought it could double or triple in the next 2 to 3 years because of AI. That was an interesting one to me. I'm just trying to see anything else here. Thomson Financial noted that at the end of last year, analysts were looking for fourth quarter earnings to rise 4.7%. Now they're up 9%. FactSet said that the PE ratio is over 20, and FactSet made a similar observation, almost identical to this, about the change. What they do is like as companies report earnings and analysts kind of change their numbers and their estimates and stuff, and they track those FactSet and LS whatever this thing is. It used to be called Thomson Financial. Anyway, it's part of Reuters. But the key thing on these is that earnings are better than people thought, and people are looking out to the future. And when you see the PE, you will see when the market bottoms and rallies, the PE will rise first. The PE ratio will rise first, and then the market looks cheap when it's at the top. But what does that mean? It means people are no longer paying forward, and now they're seeing a weakening of earnings. And this is a pattern that's been observed historically in the market many times. And so I want to just mention that. And it's interesting. Jonathan Krisky said this thing about momentum shifting. Some other people, this guy I watch sometimes, Charlie Bileo at what's it called? Creative Planning. He's made similar points about the potential for the Russell. So I think one of the things to bear in mind here is the Russell's been bad for a long time. A lot of people have been saying the Russell needs to rally, and we're starting to get signs that now it maybe is. Today it's up 2.7%. And so I think one of the things is that if this is actually happening, I think we have to just be aware that people have wanted to move away from. There's been this narrative that we need to move away from mega caps for a long time. Their earnings are in the rearview mirror, and now we might be getting confirmation if we look at the Russell, what's happening in the Russell, that this is maybe starting to happen. And if you look here, the IWM is up now 4%, in the last week, and the Qs are up 0.3%. That was not true, a week or two ago. If you look in the last month, the Nasdaq is now the Russell is outperforming the Qs. The transports are doing best. That's a kind of obscure group, but that's also an industrial. But anyway, we're seeing now this breadth is kind of coming together. So one, just mention that to everyone. We'll be back next week. I did not have time to get to this indicator using the platform, so we'll do it next. Remember, Wednesday of next week, Fed minutes and NVIDIA earnings. These are some of the other big events. We have AMAT after the close today, PPI, stuff like that. And don't forget about President's Day. Have a good 3-day weekend, guys. And I will see you next week, 2 p.m. on Thursday. Take care. Thank you very much.